What's up everyone, it's Scotty with Money Investing. In this video we are going to be talking about Trade Desk, ticker symbol TTD, who recently reported their first quarter fiscal year 2023 earnings numbers and right now is up a little bit over 6% pre-market as of the time of this video. So I'm going to break down everything you need to know about this company from an earnings standpoint, revenue, forecasting, intrinsic value calculation, the balance sheet. We're going to talk about everything as well as the technical analysis on this company as well. So I hope you guys enjoyed this video and find it helpful. If you do, make sure that you drop a like. Don't forget to subscribe to the channel if you're just joining us for the first time. The link to our Discord and Patreon is going to be down below if you're interested in joining and of course getting access to all the buy and sell alerts, options alerts, trade ideas, including that 16% annual discount. Link's going to be down below. So let's just dive right into it. First things first, Trade Desk right now is up a little bit close to 6% pre-market as of the time of this video and trading just a little bit under $69 per share. Now, year to date, this company is up over 41%. It's performed really well. And from all-time highs, we are now only down 40%, which obviously is a lot less compared to some of the other companies out there, but at the same time is also a lot more than the likes of Apple or Nvidia or some of the other companies. So going over to the numbers, first of all, I want to show you the revenue growth for the company has been phenomenal. And that means $44 million to over $1.5 billion in the last 7 years. That's a little bit over, I want to say like 40x growth in the last 6 years, 7 years. So 1577 divided by 44, we're looking at 35 to 36 times they've been able to grow their revenue. Now, gross profit has gone from 32 million to 1.3 billion. Operating income has gone from about 0.8 million, so less than $1 million, to over 113. That's a 100x growth in operating income. That's the power of efficiency and cost of economies of scale, really, and operating leverage starting to kick in over time. Now, net income, though, has been a little bit more back and forth. We kind of peaked out in 2019 at 108 million. For the last couple of years, it's been coming down. So actually the peak was in 2020, 242 million. And since then, it's obviously been coming down. And diluted share count is a little bit more stable now, but still increasing at just under 500 and just a little bit over 503 million shares at the moment. Non-GAAP income has actually been going higher consistently. We'll talk about that later in the video. And this right here are some of the margins at over 82% gross margin. So again, it's a very, very high margin business. And net income margins at a little bit over 3.3%, but that's also on a GAAP basis. Non-GAAP is definitely a lot higher. And efficiency-wise, not super strong, but again, that's probably because of the GAAP versus non-GAAP numbers here on Seeking Alpha, and free cash flow is a little bit over 30% for the business. Now, valuation, extremely high, even on a non-GAAP basis. So non-GAAP forward, we're looking at 57 times earnings multiple for the company, and it's probably going to be even higher after today's pre-market rally. Of course, on a GAAP basis, it's in the hundreds. And price to sales, we're looking at over 20, so 16 to 20 times sales right now for this stock, and price to book at over 12, and price to cash flow sitting at over 54 to 57. So needless to say, this is a very, very, very couple more very expensive stock right now. So when it comes to growth, we're looking at $1.19 in earnings per share this year. It's going to be at a 14% growth and all the way up to $7.53 by the year 2030. So if you plug in that growth here for the company, what we're really looking at is a 31 to 30% growth over the next 5 to 7 years for the business. So 31 to 30% growth is what investors, analysts are really pricing in. So this is their presentation from the most recent quarter. Again, their addressable market really is over 830 billion, and they're targeting a much bigger TAM. And they believe that advertising will be transacted digitally, and the future of all media is digital and programmatic. And eventually, all media will be digital, and it will be transacted by machines, is what they mentioned. So they're definitely on the advertiser, but the buyer side. So again, PubMatic is actually on the seller side or the publisher side. And they're the ones that are helping agencies and their brands kind of get in front of their customers. So 2022 spend by industry, so they're a little bit more diversified vertically across a lot of industries: food and drinks, automotive, health and fitness, technology, computing, shopping, home and garden, personal finance. There's a lot of different technologies or different industries at this service. And this right here is going to be the first quarter revenue, $383 million. And again, very consistent and robust growth in revenues. Adjusted EBITDA and non-GAAP net income was $114 million non-GAAP net income, and adjusted EBITDA $109 million. So it's been a little bit more on the back and forth side, but of course, first quarter 23, we do see a bit of a decline, and then it starts to trend up towards the third and the fourth quarter every single year. This right here is going to be their balance sheet. So they're sitting on about $1.2 billion on cash and marketable securities. So about $1.2 billion of actual cash and short-term investments, and their long-term debt, which is going to be their other liabilities, non-current, 27 million. And that's pretty much it. They've got literally no debt, only $2 billion of total liabilities, and total assets are sitting at close to $4 billion. So we've got $4 billion in assets, $2 billion in liabilities. So it's a 2-to-1 ratio. That's very strong. Current ratio is going to be at 3.4 divided by about 1.8. So that's also pretty strong, closer to 2. And again, they've got more cash than debt on the balance sheet because the debt is very, very low at 27 million. So they've got a negative net debt. So balance sheet's good for the business overall. Now, when it comes to the actual intrinsic value or the fair value, where would I personally be a buyer of the stock? Let's just do that very quick calculation. So when it comes to 31% growth, I'm not going to price that in. Not going to go with that number. Let's just go with, let's say, 20% to be on the safe side. I'm going to be generous here. I'm going to go with 30 times PE multiple, 12% discount rate, about a 15, let's just do 10% margin of safety, and a share dilution of about 1%. At the very least, we're looking at $43.20. And right now, we're looking at $68.75 for the company, which represents about a 37 to 40% potential downside needed for Trade Desk to be an attractive stock. Now this, remember, I'm going with some higher numbers here. I should really be going by 25 times P multiple, and that puts us at $36 per share, which means it needs to pretty much be cut in half in order for this company to make sense. And eventually you'll notice the P multiple will compress and will come down from 30 to 31, 29, all the way down to 25 eventually by 2028. So that really is what the assumption is going to be. By the way, let's see. So yeah, 31% is what they're pricing in. I'm looking at 20% growth, of being super conservative here with a lower multiple and a higher margin of safety and discount rate. And that's where I get $36 for the fair value for Trade Desk. And that's going to be the sensitivity grade, where you can kind of see based on different growth rates and different P multiples, how that fair value is going to change for this business. Now, going back over to the technicals, this right here is going to be the analysis. So $40, call this right here as a level where, you know, is going to be a very strong area of support technically, and also an area where on a more conservative basis, we can kind of consider starting a very small position, kind of taking a little bit of skin in the game, because on the higher side, we're looking at 37.80, right? So plus minus 5%. We don't want to be too rigid with our fair value. So we've got that flexibility range sitting between $34 and $37. So that's really going to be that price point that I'm watching. And right now, the resistance for Trade Desk is going to be closer to this level at 75, closer to $76 per share. And of course, looks like we're potentially getting up to that level for Trade Desk. So that's going to be that resistance support level at $40, and my fair value closer to 36. So let me know your thoughts down in the comment section below. What do you think about Trade Desk? Are you buying, selling, or holding? Let me know in the comment section down below. As always, if you enjoyed this video, found it helpful, make sure that you drop a like. Don't forget to subscribe to the channel. If you're just joining us for the first time, link to our Discord and Patreon is going to be down below. As always, happy investing, and I'll see you all in the next video.